Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for September 10th, 2007. Well, today was quite an interesting day. We saw big swings in the market, up, down, and all around. And all in all, what we talked about last Friday, which was a kind of a pause day, turned out to be exactly what happened. And you wouldn't have thought that looking at the market, taking a snapshot of the market at various technical points in the day. And what do I mean by that? Well, we saw the market sell off very hard after gapping up tremendously this morning. We saw the Nasdaq gapped up as much as 22 points at the open, selling up by 9:45 at about 22 points. It was positive, and then all of a sudden we saw a drastic sell. Come basically, 9:45. As you guys can see right here, this is the intraday ES, the S&P futures chart, which kind of gives us a better inkling of where the market's moved all day. This is exactly what we saw. So 9:45, which is right here, you see volume come in here, and we just started selling here, guys. We topped out right here a little bit before, right around 9:30, and then the sells began right here, starting around 9:45, and just continued all the way down here till about 11:30. And this wasn't even a small sell-off. This was a pretty drastic sell-off, folks. I mean, this was no doubt about it. You saw a heavy sell-off here. A lot of volume right here on the negative side, and it took the Nasdaq down as much as 20 points here at the lows. And what happened? Well, what we saw is lunchtime volume started to lighten up, and there were some Fed comments that kind of soothed the market a little bit. But overall, it just kind of, gave the market, a patience kind of mentality. And we saw the Nasdaq and the ES, the S&P futures here, kind of trend sideways to up for most of the rest of the day. So not only did we gap up huge here at the open, but we sold off. So we went from up 22 points here on the Nasdaq to down 20 points on the Nasdaq, all the way to plus about 12, 13 points on the Nasdaq here late in the day. And what happened again here, guys? We saw late in the day volume come into the downside here, as you can see these volume candles, and look at this steep sell-off going into the close. All right, and this closed here right at 4 o'clock, and then you had the after-hours movement of the ES futures, which trade till 4:15 Eastern Time, ticking up just a little bit back. So again, very interesting trading today. If you were an amateur, and I talked about this a lot in the previous videos, you got to be seriously careful here because, a lot of amateurs always jump on the train late, and that's how they get hurt. They always try to catch the ship late, and by doing so, miss the ship totally and get wet, if you would, or drown, if you would. And that's exactly what happened here. You had a lot of amateurs thinking we were going to rally up huge here, and this is the daily chart of the ES, and you can see what we've done here. We came down here off those lows and moved back up. But going back to the daily intraday chart right here, you had a lot of amateurs thinking they should go long here for a push-up. And we started to sell by 9:45 this morning. And this sell wasn't just a small sell. This sell continued and took out even a short that was kind of, even a long player, an amateur long player that had a pretty strong stomach here. By the time this market bottomed out here, look at the amount of red candles here that just took out everyone. And so that's what you saw today, guys. You saw a big sell program here at the open. You saw a continued bounce all the way, and what happens? Well, the amateur usually is long right up here, then covers somewhere in this realm right down here, maybe down here, and goes short. And what happens right when they go short? Well, the big money reverses the trend, takes us up here, small little retrace here, and another move up here, topping us out up here, which is where usually these shorts will cover and go long. And then what happens right here? Right into the close, we sell off hard and close right here. So overall, we saw that the markets closed flat on the day, flat, slightly positive, slightly negative, depending on which index you're looking at. But it was a very interesting day, very whipsaw day where you really have to be careful. Best trading in this, especially for day traders here, the best trading is on the scalp side. And scalp trading is really what you're doing when you're just looking for small moves. You see a trend line broken. For instance, I'm going to go to my trend tools, and we're going to just look here, guys. And I want to point this out. This bottom, by the way, corresponds with some levels over here earlier in the pre-market, but this bottom here, once it was taken out, once you got this close right here below, this is a short signal, and you can see a nice move down here on that base close below. You always look into the charts. You always want to see the charts, how they represent closes below and so forth. Also, what you can take here as a negative is this candle right here. See the 20 moving average and the 50? This candle closed well below those two moving averages. That's a very bearish signal right there, and that can be taken as so. And then again, once you get that close below this line, you have basically a definite downtrend starting here. Okay, and what do we see here, guys? Once we saw this little wick and this volume right here, this volume spike here, this little wick here, this attempted rally, this push down to make a double bottom, by the way, when you're watching this intraday, you're seeing that it pierced or the same level and went slightly lower, but they couldn't close it below this low over here. And the fact that they made this candle green here on the top is a definite rally signal, all right? And in the chat room, we talked about the SSO there, which is 2 times long the S&P going long there, and you can see what basically the move you had out of that. You had a tremendous move on the SSO if you took that as a long play there. And this is, again, intraday plays. And as long as you moved out, once you saw this candle formation again, just like this candle has the wick on the bottom with the green on the top, guys, this here with the wick on the top and the red on the bottom is a negative signal. So the second you get that signal and you break that low right there on the next candle, that's your signal to move out, and it's going to go down. So you either go short there or you just move out of your long position. And that's how you should be reading intraday stock candles. Right today, the moving averages were somewhat good. And just to point out, you guys know I'm a huge believer in moving averages. And right here, you can see probably the best example of how a moving average worked. We had a strong move up here, you know, from basically down here all the way up. Then what you had is a retrace down, and the first pierce of the 20 moving average always gets you a bounce. It's always a good bounce play. I would say it works 90% of the time. And as long as you do that, you're pretty much set, and you can see the type of move you got off that 20 moving average hit. And you always wait for that pierce of that moving average. I always like to see a pierce. And the fact that it's not closing below, that's a dead signal that they're going to bounce this market right there. So again, that's the analysis intraday. But now I want to get into a little more analysis on the daily. And we're going to look at the NASDAQ daily chart to go into this a little more. Here's the intraday NASDAQ chart. And again, you saw that whippy market. You saw the gap up here. This tail, again, you guys know when you see this tail here and a close in the lower portions here, that's a negative signal. You wait for the break of that low right there, of this candle's low, and you go short. Alright, so intraday, analyzing the intraday again, and this is, we're using 10-minute intraday candles here to do this analysis. You see that whole big move down, then you see the move up, the small retrace back to the 20 on this chart as well, and the move up. This bearish candle formation, which is pretty much the same here, except this is red, this is green, but either way, you have that tall wick at the top, and you have that sell-off right into the close. Alright, and that close, it closed basically right on the 50 moving average right here, which is very interesting. We'll find out more about that tomorrow. Right now, after hours, it's about 7 o'clock now, p.m. Eastern Time, and we have the ES futures trading down 125, which is nothing, by the way. Very light volume, and we'll have to see exactly what we do tomorrow. Now, we have been cautioning that basically going into this week, we thought we might have a nice size move down. We'll have to see how that plays out here. We did get that big move down on Friday, that little pause day today, and we're going to see exactly what we get on Tuesday and Wednesday. By Thursday and Friday, we do have a economic number on Friday, so Friday morning might be active. But in regards to the Fed coming out next Tuesday, if they don't pre-announce, then Tuesday's the day next week anyways. So by Thursday, Friday, especially Friday afternoon, it could get very quiet, and Monday could be even quieter, and Tuesday through till the Fed announces could be very quiet. So we will monitor the situation and just follow it, but we do think that there might be some more volatility in Tuesday and Wednesday coming here. So be ready on your guns, guys. Be alert and be careful, obviously. Looking at the daily chart here, looking at the daily NASDAQ chart, which I'm looking at right here, you can see we had that kind of pseudo head and shoulders pattern right here. But again, you guys know I talked a little bit about this in my video, how this shoulder right here is a little wussy shoulder. It's not a good shoulder, and that made me very, very fearful of a continued move up here. When we were right here and we were talking about head and shoulder moves and how that inverted head and shoulder move should push up more, I said, guys, be careful right here. This is not a very strong head and shoulders pattern. And sure enough, we reversed to the downside here, and now we're right sitting. This is we hit on the NASDAQ. As you can see, we pierced that 20 moving average. And what do we always say about this? And I just said it on the intraday chart, and it applies on the dailies. When you pierce the moving average for the first time, and again, this would be the first time because we came down here now for the first time after pushing up here, the first pierce is always a bounce up. The second one, if you don't get a good bounce off this, which you might, we still might get a little bit of a bounce here, but if we don't, then the next time it comes down, it should close below, and that could yield a sell to the next support level, which right here would be at this level right here. Okay? I don't think that's going to hold, though, to be honest, even though it coincides with this whole level over here, so you have a nice support system here for this two shoulders, if you would call them a two shoulders. The next spot, once it breaks that, is going all the way down here, guys. And this is where, inevitably, we think this market's going to head eventually over the next few weeks. Okay? Probably after the Fed, we'll see that. I can't see it happening before the Fed because Thursday and Friday could get very quiet and Monday. But inevitably, guys, we even see this market possibly breaking this low here and taking all the way down lower. We are not out of the woods yet, and that's the key, guys. Although we did see financial stocks rally today. And I want to bring up one chart pattern. I want to bring Goldman up. And you can see this is Goldman's chart. Very solid move up all day until that last little bit of selling. And yeah, that last little bit of selling is still, you don't like to see that there. But in the very least, Goldman Sachs was still up. This is the stock symbol is GS here. Goldman Sachs was still up almost $5. All right, guys, I'm going to finish up here. I've taken up enough time here. The video only allows me to do 10 minutes worth. But come join our intraday stock chat. Awesome chat room for everyone, amateurs, pros, whoever. In addition to swing trade alerts, we just closed out BJ. That's BJ Wholesalers for almost a 6% gain here. And we went short right up here. And in just about 4 days, we took out about 6%, 6.6% on the swing trade alerts. That went out to everyone, all our subscribers. Great swing trade alert. Come join the swing trade alerts at inthemoneystocks.com, intraday stock chat as well. We'll talk to you guys tomorrow. Be careful tomorrow. Could be interesting. Bye.